Stock Alert Time, one of the biggest financial podcasts, came out with 2 stocks that's on their watch list. I got emails about it. Actually, a client called the office. So I got to give you guys game on these 2 stocks. Is it a buy? Is it not a buy? Should you wait? One of these stocks, we actually hold in our portfolio. So, we're already to the curve. But I'm going to show you guys what to do and why we should invest in these companies if they're a good match for you and your risk. Before we get started, as always, like, subscribe, and share to our channel. In real life, I'm a certified financial planner, helping thousands of clients worldwide, but only social media airways. We're just giving information. Hope this information is going to help you scale your finances. Y'all ready? Let go.
And you just wanna get paid, tired of making no money mistakes. Make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different.
All right, so we ran up 1,000% on Micron calls and AMD. What's next in the market?
Ooh, 1,000%. First and foremost, from a risk standpoint, those are options. And options are when you have the option to buy something. Typically, options give you about a 10x return on your money, meaning that if the stock goes up by 10%, your option might go up by 100%. On the flip side, if that option goes down by 10%, you might lose all your money. So options, from a risk standpoint, very risky, but from a reward standpoint, allows you to get to the bag. So just take that as context.
What you looking at?
I mean, we did well with the GPUs, right? When we talk about NVIDIA, we talking about Broadcom, AMD.
NVIDIA, stock of the decade. I don't know when they bought into NVIDIA. We had our clients in NVIDIA in early 2024. NVIDIA has been amazing. Troy, shouts out to you. He did the Micron play. We didn't have clients in Micron until a year ago, and Micron has done very, very well. So they definitely got something cooking.
We did well with the memory sector when we talk about SanDisk. And
So actually, an investment we did for our clients early last year that went up, then went down, but back up again is SanDisk. You think about from a memory standpoint, things are not the same. And these little chips right here, right? This is SanDisk. So you're saying, why did this stock go up so much? And look at SanDisk, you guys, up by 127% year to date. Crazy, right? And so it went up, and actually went up as high as $695. And it has a drop, right? So it did go down by 15%. We actually bought back in this 2 weeks ago when it was at $575. But these chips, these little kind of memory chips, right? This is the future, right? Is it just me? Or is that you're working hard, but you're not seeing the financial results that you want? We're clocking in, we're clocking out, we have the income, we're making the money, but our wealth is not growing like we want it to. Well, my friends, it's not your fault. You know why? Because we're never taught how money works. We're taught how to spend it, but we're not taught how to leverage the money that we're making right now to build wealth. Now, wealth, it comes in all different shapes and sizes. The question is, how much wealth do you want for you and your family? But the best part about it is help us on the way. Join us during our 5-day mentorship, where you learn how to structure your money, reduce your tax liability, increase your net worth, and build wealth. We'll show you how to go from a wealth builder to a wealth strategist to a wealth creator, and leaving that long-lasting legacy to your family. Click the link below and join us on our 5-day mentorship. We will help you accelerate your wealth. Now back to the episode. Cameras, and how do we have memory? These chips. And until we find a better way to make this digitized, these little chips right here is going to make the world of difference when it comes to storing data. We don't have enough memory. We don't have enough data. We don't have enough storage. So as SanDisk find ways to monopolize, make these cheaper for us, make them use it and give us more bang for our buck, SanDisk, I think, is going to continue to go up. Some analysts think it's going to hit $1,000 a share by the end of next year. That's crazy.
SanDisk, and we talk about Micron and Western Digital. I think the next focus we have to have is the EDA sector, right? EDA, electronic design automation software.
Now you're probably like, what is electronic design automation software? Now think of it like this. We all have a house. Inside of our house, we have circuit breakers. So if it's a fuse or something happens, that circuit breaker turns off and it allows our house not to burn down. Well, in large data centers, they also need these as well. Think of NVIDIA. They have their GPUs, and these GPUs power so much things and they create chips. Well, with the GPUs, just like your house, what if something happens? They don't want this very expensive machine that takes years to create go away. They want it to burn down. So when this happens, just like a house, you need a circuit breaker. You need to make sure that if one thing fails or a fuse breaks, it doesn't mess up the whole system. And that's what EDA is. And from an automation standpoint, it's automated. It's technology and software that says, hey, something is overheating. Let's have this circuit breaker switch so a fuse is not blown or the whole GPU gets burnt down.
And so every CPU, every XPU is going to need that software to automate on. There are two companies that lead it, Cadence and Synopsys.
All right, so Cadence and Synopsys. And we look at the chart, we have Synopsys. And we've had Synopsys actually for a few weeks. But you look here, right? If we look actually where it was in 2021, 5 years ago, look at that growth, right? And we look down, up by 125%. So amazing growth. In 5 years, beating the market averages about 10% a year. This did 22%. But then after its high, now today is at 51%. So about average with the market. The reason why we like this is because the drop down, right? And we always talk about investing from a standpoint of buying things at a discount, getting back to where it was and taking advantage of that. So as we can see, July of last year, it was at $646 a share. And this went down, as low as 41%. If you think it's ever going to get back to where it was, a 41% decrease means a increase of almost 90%. So we was looking out for that, thinking that if it starts to go back up and trend up, we want to take advantage of it. But with a drop that big, we want to kind of have it grow maybe half to where it was, just from an investment standpoint. Look what happened again. In January 26th, it popped up and it went down, to 24%. And this leads right into our cliff, dip, bear strategy we always talk about, right? You want to buy something, yes, buy a little bit. When it goes down by 5%, that's the cliff. Buy a little bit. When it goes down by 10%, that's the dip. Buy a little bit. But then when a stock has a bear market, and most stocks go down by 20% once every 9 months, and Fortune 500 companies once every 15 months. So this happens more than what you think. So as soon as that happened and went down by that 24%, our thought process is, let's get into it. So we actually invested this a few weeks ago. Now, are you like the 83% of Americans who want to get a trust, who want to get a will, want to get a power of attorney, but you don't have one? Well, you are not alone, because 22% of Americans have one. That means 1 out of every 4 families have a trust, a will, and a power of attorney. Which bracket are you in? 1 out of 4 or 3 out of 4? It's okay, because we have the Relax Estate, a fully automated AI platform that allows you to create a trust, a will, and a power of attorney all at the fingertips. And if you are an insurance agent, tax professional, financial advisor, notary, or in any business profession, you can even white label this to your clients. You grow your business, you help your clients, everybody wins. Visit our website, www.therelaxestate.com. Right here, therelaxestate.com. And you can create a trust for your family, or if you're a business owner, want to use it to scale your business and help your clients, you can do that as well. Now back to this wonderful episode. Now, if it ever gets back to 646, what is today, that is a great investment. That is going to give you over 80%. If a person does options, not just information, not a recommendation, and past performance does not guarantee future results. Not recommending you do an option, not recommending you invest this. I'm just telling you what we are doing for our clients. And we don't do options. We're all long-term investing, because from a risk standpoint, long-term investment de-risks your portfolio compared to options. However, if it gets back to where it was, even if it takes 2 years to get that, that is a 40% a year. And we know what SanDisk has done, right? We know as Micron has done. And since this is the next step in chip development, constructing chips, creating chips, the distribution of chips, we believe this might be a great investment, and that's why we put our clients into it. Not telling you to, just telling you what we did and why we think this is going to be good going forward. Now, the second one he talked about was Canopy. We'll look at this. Cadence. Let's look at this company. Now, Cadence, not as choppy. As we can see from past 5 years, as high as 154%. So definitely not as good as Synopsys, right? But look at the drop though. And again, we like to look at this because from a drop standpoint, as we see, down by 30%. Now, unlike Synopsys that has crept back up and showed some sign of non-weakness, this thing not at all. But now, this is something that you want to look into from an investment standpoint. Again, not a recommendation, but information. We see here, this right here, right? Now, this tail on the candle is very trying, right? This means the first week of February, you had a lot of people selling this, okay? They sold it from at $282 a share all the way to $265. That is a 10% drop. But then by the end of the week, a lot of buyers said, you know what? This stock is oversold. We like it at this price. This is a discount. And a lot of Wall Street, a lot of hedge funds, a lot of people that move money bought it and it popped back up. So this is what we call support. Most people believe that it's not going to go down by 265 because people think that's a great buy. Now, I'm not saying it's not going to go down by that or further, but that's what quote unquote support is. So we kind of have our gauge, right? So we think, well, Wall Street thinks it won't go past 265. Now, to get back to where it was, as we talked about from here, that is a gain of 25%. Last time it was there was September of last year. So if it takes a year, right? A year from now, you're getting a 25% return. You're still historically doubling the stock market. If you do options, you're looking at 250% or more. Not a recommendation, just information. So Cadence is a company that gives you the ability to buy something low in a industry that is growing or starting to grow, and you're able to maybe get into something like Micron was 2 years ago, like SanDisk was this time last year, up 125%. And if it grows and repurposes itself and more of Wall Street takes advantage of this, this can easily get to $450 to $500 a share. But the real question is that going to happen? Now, nobody knows but God the future, and past performance does not guarantee future results. But the last question is it a sector to get into? And we're going to talk about that. Well, it's an industry that creates software to wire chips, right? So again, software that automatically wire chips together, right? If we have software that does that and not man-made people, is that going to cut resources or increase resources? I think it's going to cut resources. When that happens in a company's profit margin, is that going to go up or down? Well, if I make the same amount of money or more and it costs me less money, my profits will go up. That means an increased profit margin. And increased profit margin means your stock going up over time. Is this going to help companies be efficient? Well, right now by hand, designing complex chips like GPUs, like Troy talked about, CPUs, that is very complex. Join us in our school community as we have modules, classes, courses to go from a taxpayer to a wealth builder. How to use our cliff, dip, bear strategy to do better with your investments. How to acquire businesses and how to use your retirement plan to grow and not pay taxes. What? I can have a retirement plan grow and not pay taxes? Yes, your IRA or even your 401k at your employer. This and other things we focus on in our school community, the Relax Investor. And guess what? You get 7 days free access and you get our weekly coaching calls every Wednesday. You and hundreds of people ask questions to 6, 7, 8, and even 9-figure business owners that tell you how they created their business, how they run their business, and how their finances is as smooth as it can be. So click the link below and join us in our Relax Investor Academy to help you scale your finances. Now think about a surgeon, for instance, right? A surgeon has to make these cuts. If they go to the left a little bit or to the right a little bit, they can have an artery. They can have a person die, or they can just have a scar that'll never return. You have to be so precise as a surgeon. When you think about creating, designing, and manufacturing chips the same way, right? Because every single chip has a small little detail. And if it's put on the wrong way, if it's adjusted wrong, then it can harm or even malfunction the whole chip. If you do something 1 millimeter to the left or to the right, you're going to make that chip not as efficient. Now we have the ability to actually make our chips with software that's not labor intensive, that's not done by hand, but is done by machine. And that, my friends, goes a long way for chips being efficient effective, and working properly. Because with errors, even if somebody does it wrong, but then from a quality control standpoint, they make it right, it's still time. It's still time a person has to do. They could have been doing something else. It's still money that's costing the company. So this automation will allow companies just to be more efficient, more effective, giving workers the ability to do other things. So everybody now is more productive, and higher productivity means a possibility of a higher stock price. So if you can help engineers create chips faster, that's a good thing. If companies are able to decrease their resources and increase their profits, that's a good thing. And if you can have circuit boards and GPUs and CPUs that make sure that nothing explodes, that fuses are done correctly, and there's no harm in those big GPUs, so that's a win for NVIDIA, AMD, TSM, SMCI, and everybody else in the chip making industry. So yes, in closing, I agree with Troy 100%. These two stocks should be in your stock list. Now, past performance does not guarantee future results. Not here recommending these stocks. We again own Synopsys right now in our client portfolios. Take that where you may, but make sure any stock that you do fits your risk tolerance and fits your time horizon, because you're the one that have to have the painful profits when the stock is going down and you still have to hold it, right? So it's up to you to make that decision. But like, subscribe, and share it to our channel, and comment below. Are we right with these stocks? Are we wrong? Is there any other stocks in this sector or any other sectors you think that might be a good buy in 2026 or 2027? As always, let's make some painful profits together, y'all. Peace.